Hello everyone, this is Rahul Jakaria from Sharekhan. Welcome back to exciting 3R actionable stock updates. 3R basically means right sector, right quality and right valuation. These are our investment ideas. Today we have an update on Himatsingka Seide. Our analyst maintains positive stance on Himatsingka Seide with an upside of 23% over the next 12 months. The company posted strong performance in quarter 1 with revenues getting back in positive trajectory and strong expansion in margins led to healthy bottom line. Capacity utilization for terry towel and sheeting division improved quarter on quarter to 67% and 66% respectively. Focus on expanding market share in key geographies, expanding the channel's reach and adding adjacent home textile products in portfolio will help to achieve consistent improvement in utilization and higher revenues in the coming quarters. EBITDA margin stood high at 21.7% with stable cotton prices and improved operating leverage. Operating profit margin will remain at 18 to 20% in the coming quarters. Focus on improving operating performance and deleveraging the balance sheet will further drive valuation. Stock trades at 9 times its FY24 estimated earnings and 6 times FY25 estimated earnings. Next on radar is HEROMOTOCorp. Our analyst maintains a buy on HEROMOTOCorp with a revised price target of Rs 3,441 on healthy recovery in EBITDA margin, strong response to HDX440, continuous focus on premiumization, expansion of its EV market and attractive valuation. After receiving 25,000 bookings of Harley-Davidson X440, the company is focusing on volume revamp. Stock trades at price to equity multiples of 14.8 times and EV by EBITDA multiples of 8.6 times its FY25 estimated earnings. Next we have an update on Kirloskar oil engines. Our analyst reiterates positive view on Kirloskar oil engines as its results were robust, primarily led by B2B segment as strong pre-buying in power gen sets dominated the quarter, which was up by 55% year on year. Operating profit margin and net profit also improved considerably. The company is seeing strong demand for retrofit, dual fuel kits and emission control devices in CPCB second gen sets. The company has deepened its market penetration in the B2C segment and there has been 35% growth in the dealer base on a year-on-year basis. In the long term, stability in the genset market, launch of new products, traction in exports, growth in after-sales service and various cost optimization initiatives would be growth enablers. A healthy balance sheet with a lean working capital cycle provides further comfort. For more detailed disclosures and disclaimers, please refer to our research report or contact our nearest branch. Please read the risk disclosure document issued by SEBI and relevant exchanges and terms and conditions on sharekhan.com before investing. Investment in security markets are subject to market risk. Read all the related documents carefully before investing.
Thank you for watching. To keep up with the latest from Sharekhan, make sure you subscribe to our channel. You can also download the Sharekhan app for all your trading and investing needs. Investment in securities market are subject to market risks. Read all the related documents carefully before investing.